Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.
Welcome out to Tackle Trading's Coach's Show. My name is Matt Justice, Coach Matt. I'll be your host for the Coach's Show today. I got Gino Noah, the author of the Scouting Report each week that I know every single one of you just love with all your heart. I got Coach D, Coach Noah Davidson out there, as well as Tim Justice on the phone, and we're going to have an absolutely rock-solid hour for you guys. We're planning on covering quite a bit of material today. We know there's a lot of questions out there that a lot of people have regarding the scouting report and the market in general. So let's get right to it. Gino Noah, come on in here, buddy. You put out the scouting report each week, and this week in the market we had the bullish team, we had the bearish team, and then we had a credit spread, GMCR, Iron Condor. But I want to start with your Debit Condors, Gino, if you don't mind. There was a lot of questions on the Debit Condor. Now, very quickly, if you will talk about kind of the strategy of what a Debit Condor is, why we're trading a Debit Condor, and then let's go through an example that we had last week in terms of a couple of them, and then obviously we'll hit some of them this week. So the Debit Condors you had this week were on Baidu, Amazon, Netflix, WDC, FFIV, which is F5 Networks, and Tesla, TSLA. What was it about those 6 stocks that you were thinking a Debit Condor was going to be a fantastic trade?
Yeah, how am I coming in, Matt? Pretty clear?
You're coming in fine.
Okay, so the Debit Condor is a great strategy for somebody that's not sure which direction the stock's going to go, but you'll notice those stocks all have something in common. They're big movers. They're expensive. Mm-hmm. So what I screen for is I'm looking for stocks that have an ATR, meaning they move on average at least 2.5 points a day.
Okay.
And this is not your traditional spread. This is an elite spread and kind of one I came up with. And I don't want to go over everybody's head, but it's a gamma play. What this means is when people do spreads, they do them to bring their cost down. So what I'm trying to do is play both directions like a strangle or straddle, but as cheap as possible, because as you know, straddles and strangles, when the volatility drops or the stock doesn't move, those options decay fast, and you got one on each side. So what I'm doing is I'm hedging them off with a short leg on each side to negate that time decay, negate that Vega drop. And it's a really close spread. Like these are 2.5 point spreads, and that's on purpose because the closer the spread, the more you negate the time decay and the volatility. But here's the thing: they're also weeklies. They're short term. I'm not playing the delta. I'm playing it going through that spread. So I'm trying to get them as close to the stock price as possible, as cheap as possible, and see when you look at these, you go, man, this one's $1 or less because it's a 2.5 point spread. If I got a risk tolerance of a pain threshold of $200, I'm going to do 2 of these. I don't need to stop. I don't need to check it every day, but you should check it every day for profit. Anybody can do this. This is a way that anybody with a small account can trade. And I can even go shorter term and tighter spreads and get in there. For example, I did Apple for 20 cents the other day. I mean, 20 cents, what's the risk? $20 a contract. This is nice because I can actually be in the play and I'm not missing it. But most of all, if I'm wrong, it's not a big loss.
Yeah, it's a very small loss. I want to talk real quick. Okay, go ahead.
Real speaking of that, I'm not shooting for 1,000% batting average here.
Yeah.
I'm happy with a batting average of about 20 to 25% on these. So if I can nail 1 out of 4, the reward on this thing, well, think about it. Some of these I'm in there for 80 cents, and I can make 200. So $80 versus 200. I only have to be right 1 time out of 3.
Yeah.
So the risk reward's great on a lot of these.
Gotcha. And honestly, Gino, a lot of our team members out there, they've been virtual trading some of these Debit Condors to get a little bit more experience in terms of playing this because you like them so much. But one of the things they've been struggling with a little bit is how to get into them, number one, and more importantly, how to manage it in terms of getting out of it. Let's take the Baidu example here, the Debit Condor. When you're placing this and you're placing the call spread and the put spread, are you doing all four of those legs simultaneously in the order?
You can do that. And what's nice about that is you know what your cost is. I'm putting it on the scatter report. Don't spend $1 or more, dollar or less, 80 cents or less. You can go a nickel above that if you want, but it's a limit order if you do the whole thing. But if you're at work or you're just placing the trade and walk away from it, that's what you have to do. But if you could be in front of the computer, try to do the call spread and the put spread separately. And once you're filled on one, go ahead and get filled on the other one. You might have to adjust it. You'll get filled faster if you do the calls and puts separately. The main reason why is when I was down at the CBOE, that's what they taught me. They said, listen, when these orders come in, we have to accept all four legs. We might be good at the pricing on the calls, but we can't price the puts. So when you're looking at the chain on Thinkorswim or any chain, you're not looking at one exchange. On four legs, you might be looking at the price on 4 different exchanges. So one exchange might be competing with the puts, one might be competing with the calls. Another way of putting that is this. The grocery store A might have great bread prices, but grocery store B might have good milk prices. And you're saying, I want both prices at the same time, and I only want to go to one place. No, you got to go to separate places. You got to split it up.
Gotcha. Hey, Noah, real quick, can we pull up a virtual trader and take this one?
You bet. I haven't logged in.
I do want to pop in on that for just 1 second. I think the advice Gino just gave, and by the way, this is Tim, and welcome everybody out there. I think we have our biggest audience yet, so that's always really cool to see that. But the advice Gino just gave on Debit Condors, which I like the short name, the Debit Con. I kind of like that. That's true. That's true for iron condors and butterflies as well, right, Gino? I mean, separating it out vertical by vertical is an important skill set to have.
Absolutely. And especially, well, it's okay to do the whole condor if you have 5 contracts or less. When you start doing 20 contracts or more, you'll start noticing partial fills. And in fact, that's when I send my orders in, I do 20 at a time, because the partial fills are, what that means is you get 5 will get filled and then 3 will get filled. And on a lot of brokers, when you cancel and replace that, they add a ticket fee to it. And you're getting a ticket fee every time you cancel replace it. And then all of a sudden, if it's partial filled, what that means is an exchange took that order and they're stuck with it. So let's say the ISE, they partial fill you, and all of a sudden they can't fill the rest of your contracts. So now you're sitting around waiting, wait a minute, do I cancel this order or do I just wait? Because they might only had enough orders to fill maybe 5 contracts. And I've actually had that go into the expiration and they're going, I can't get out of it, because when you go to cancel the order, you can't because they have it on their trading desk. So it's like, yeah, that kind of messes you up. That's why I like Thinkorswim. You can opt for no ticket fee. So when you cancel replace, it cancels your order and you can put it at a different exchange.
Now, Gino, when you're doing that, do you do that on the order ticket? Is that one of the settings you choose? One of the things that you set up when you're placing the trade?
Well, on the commissions, you have to do that ahead of time. You got to figure out, I never get
Baidu, Noah.
Okay, you want to go with Baidu?
Let's go with Baidu. All right, so let's kind of look at this real quick, kind of showing how to place the trade. This is a Debit Condor, or as Tim likes to say, because he ripped off Comic-Con, the Debit Con. And let's go with the put spread, call spread on Baidu, the put spread, Noah. And Gino, this was a week, what was this? It was a weekly?
November 2s.
Second. Okay, so the number second. I got the strike prices for you, Noah.
Okay. So let's second week in November.
Second week in November. Let's go on the put side first. We're doing the 225, 227.5 put spread.
225 by 227.5.
We're long the 225.
Now, real quickly, who dominates that spread? This is a great lesson. You see where he's clicking? You see the C next to that price?
That's
the C. So the 225 is the CBOE. That's what C stands for. See that 57 cents on the 22.50? That's the NASDAQ right there, the Q. That's the exchange. Those letters you guys see on there, now it's the ISE's dominating. So looks like CBOE's got the long. Oh, see, you're gonna have a problem. The short and long are 2 different exchanges.
Yeah. So you're seeing they're changing. They're constantly changing the quote.
Yeah. And by the way, Baidu, it's probably on all the exchanges. They're all competing, so you'll have no problem getting filled.
Yeah, there's a lot of liquidity on there. I'm not worried about getting filled on Baidu. But just to make sure everybody's aware of that, though, Gino, when is that an issue when you're dealing with, because it changes rapidly in terms of the exchange it's going to. When is that a problem? When do people have to actually worry about that?
That's when you have very low liquid options, especially when you're doing a big, like 20, 30 contracts or more. Because remember, they got to find somebody on the other side of that or take it themselves.
Mm-hmm.
What you're looking at on those exchanges is the lowest ask and the highest bid. You're not looking at the same exchange all the time. And if you look on the right where it says best on his order right there,
Mm-hmm.
see on your right over there, I think that's Noah's, right?
Yeah.
Yep.
Change that to 225. There you go.
So it's going to the best price.
So real quick, when you got the mid price and the nap price, explain that to everybody too, Gino. What is the mid price? What is the nap price?
Yeah, now this is the most confusing thing Thinkorswim has ever done. They gave us this nice little toolbar down here that says natural
Mm-hmm.
and mid. Natural is the market. It's the market. If you just place a market order, you're probably going to get filled there at the ask. So natural is the ask. The natural ask is what they're calling it.
Gotcha.
The mid is the middle of the bid ask.
Which is where we want to go, right?
Yeah, that's the best you can get filled if you split the bid ask.
Now, Gino,
remember,
you trade lots of contracts here in terms of, the amount of liquidity that you drive on a daily basis. You probably trade more contracts than the rest of us. And so when you're looking at the mid versus the natural price, are you ever finding a problem getting filled at the mid price?
I'd say 60% of the time, because I'm doing very liquid stocks, no.
Mm-hmm.
But you know what I actually do? If you have time and you're in front of the computer, I would go 27 cents and go inside the mid and then watch what happens. Because it moves around. If you don't have time, you're going to have to go between the mid and the natural. Now, here's the most confusing thing Thinkorswim's done. They changed the natural ask to just natural. I wish they left the word ask in there.
Yeah.
They changed the word mid from middle price or mid price. They shortened it up. But when you go anywhere else on their site, do you know what they call the mid? They call it the mark.
Yeah.
And I'm like, why don't they just keep it mid?
For all the team members out there, typically if you will go to the mid price on your orders, I see a fill rate very quickly at the mid price most often. And Gino's absolutely right, guys. The only time we typically don't see a fill is if we're dealing with an illiquid stock. If you're dealing with illiquid stocks, it's going to be a lot harder. Your in and out's going to be a lot harder. It's going to be much more difficult to manage, to get in, to get out. And that's just reason number 985 why you want liquidity, why you want a lot of liquidity out there in terms of the overall open contracts in the market.
Now, Gino, this has probably been the trade that's generated the most questions for me. It's not one I personally have done quite that many of. It's even a concept that I've oftentimes thought when selling condors, when they initially go against you, I've always thought to myself, why don't I buy these and take the money real quick? Looking at that, when you're placing the orders, do you change which exchange you're trying to get cleared on?
If you just leave it at best, you'll get filled, no problem, with 5 contracts or less. When you start doing 10 to 20 contracts, that's when you got to start splitting up the puts on one side and the calls on the other. Real quickly, go to the chain. Who's dominating the calls on this? We got the 247.50.
It was the CBOE on the one.
Yeah, see this one? You're gonna have a problem. See that?
NASDAQ, right?
NASDAQ. I don't see CBOE on those at all.
Yeah.
If you click the letter, you'll see what line they're in. Go ahead and click we're going to be buying the 250. Click that N. Click that N. Let's see how many contracts are at that price. Okay, so it looks like everybody's got 178. You're good. Everybody's got 178. And there's plenty of contracts. See that?
Mm-hmm.
So there's a pecking order, but sometimes you'll click it and there is just one person at 176. Like, there you go.
Very good
See
tip
that?
for all the team members out there. Click the exchange icon to see if the bid to ask is dramatically different per exchange. Awesome job, Gino.
Now what's nice about indexes is it's usually just one exchange that trades that index, so you don't have to worry about indexes, because a lot of people do iron condors and debit condors on the indexes.
Yeah, like on the Russell, on the S&P,
Yeah.
on the NASDAQ and whatnot.
But that's the thing, is everybody's like, what's that letter? It's useful. It's got a lot of stuff there.
Mm-hmm. Gotcha. All right, Gino. Now let's talk about. So we place this trade, whether we split it up on the put side, the call side. If you're trading less than 5 contracts, guys, you can do it all simultaneously in terms of the puts and the calls. And Noah, as I'm talking, if you don't mind putting on that call side as well. Once we have it placed on the call side and it was 247.5 by 250, Noah. Once we have that placed on the call side, we're in the trade. We get some movement. Let's take, for example, Facebook last week, and why Noah's putting this trade on. We get that initial movement down, and it did. If you were listening to the Coach's Show last week, we were expecting a $5 movement. We got a $5 movement. It got to the bottom end of our range. Gino, how do you manage that trade at that point after Facebook announces their earnings?
That's where the rules come in. So if you're playing an event and you get your move, you should take some off after the event no matter what, whether you're winning or losing, because you were playing the event. Now, if the trend's in your favor, and in this one the trend has to be in your favor because you're playing both sides, the only way it's not is if it doesn't move.
Mm-hmm.
You take off usually the whole condor, but you can leave one side if you want. If you have trends, like right now, Facebook, what's Facebook doing? I think it's bearish. In fact,
it came back up in price. It's currently at 75.50 right now.
But what you're going to find is, if you go to take off the whole condor, the one that's way out of the money, the side that did not get the move, it might not have a price, meaning it might be 0 by 5.
Mm-hmm.
If you're trying to close it and it won't close, it's because they can't find anybody to sell to at 0, of course. So it's sometimes, again, you have to exit both sides, or just sell your long legs on the one that is out of the money.
So what do you do, Gino, in the situation where you have $0? Do you offer some money?
Well, that's the thing, is when you do a spread, it doesn't change the bid ask. But if it's a 0 by 5 on your short leg, which is the one way out of the money, you can try to buy it back for a nickel, or just let the spread expire. It matters, are you going to make any money if you sell that spread? If you can make a nickel or more, yeah, get out of it. In fact, they don't even charge you commissions on a nickel if you're closing a spread or a leg. But you got to look at the prices of the spreads, the puts and the calls. Same thing as entering. Do I get in separately? Do I get out separately?
Okay.
I see a lot of people, I get a lot of emails, they're going, hey, I'm not getting filled. And I go, well, you got a spread on it, you're trying to close a condor. The calls are 0 by 5 on both legs. There's nobody to fill that. So just let it expire.
Okay,
What's nice is this: if you take profit on one side and leave the other side out there, you might get a move back to that side and make money on it.
Okay, so in the order entry portion of this, Gino, I press the control button and I put them both on the same ticket, and it automatically put them into an iron condor right there.
Yeah, that's
I put that in. As you're doing the order entry on these, if you're doing them all at the same time and you're playing around with this, it put all the prices together. Is that how I want to go about doing this?
Absolutely. That looks good. Again, look how wide the bid ask is. And these are weekly pennies. Another thing, a little quick note, is the reason I like to deal with weeklies is they only made weekly options on liquid stocks and options. So when you're doing a weekly, you already don't have to check the liquidity. They wouldn't have made it a weekly and made it pennies if it wasn't liquid. Just a side note. So yeah, you can put it a little bit better than mid, and then what I do is it's called walking the price. And Option Express actually has a feature that every 30 seconds it moves it up one increment. So it'd go from 94 to 95. Then 30 seconds later, 96. It cancels and replaces it for you, which is really cool because on the Option Express, I would go 80 cents on this one. Just let it walk into the best price.
That's a pretty cool idea.
Yeah, but 94, you can get that.
Yeah.
On 5 contracts, no problem. 25, 30, yeah, you're gonna have a problem.
All right, so just to recap, in placing the order, you can place either both the legs separately, or you can just do it simultaneously. You can look at the different exchanges to get a better fill rate if you so desire. If you're trading 5 to 10 contracts or less, typically you don't have to do that. If you're trading over 10 contracts into the 20 and over stage, you might want to do that and let it walk into that spread, as Gino says. If it gaps as expected on an earnings report, you got to take action. You got to take action there. If it gaps to where you expect, you got to take action right there. Pull up the spread. You can pull them off simultaneously in different managements, or you can just pull it off, at that time, the entire Debit Condor spread. Correct, Gino?
Perfect.
Now,
Awesome.
Gino, you mentioned that this was a gamma play, and as I look to put it in, this has got a little bit of a bias on the delta.
Hold on one
Got
second. I just
gamma
put a
right.
poll up, Noah.
Yeah.
They can't see the screen until I close it. I just asked the group, have you used the Debicon in your trading account yet? And I wanted to get a feel from our attendees, how many people have used this strategy before? 63% yes, 38% no. So most people have tried one of these from your scouting report, Gino. So I think that's really neat that people are using the information they're being provided and taking action on it. Let's go ahead and close that poll up so we can see your screen again, Noah.
Thank you. I'm willing to bet that 63% of those people that have tried this have tried it in the last couple of weeks since Gino's been putting it out there. And guys, the first time you play any trade, it's going to be weird. I've been trading options for honestly 9 years now, and the first Debit Condor I've ever placed in my life, I'm not kidding, ever, was last week with the Facebook, and for me, it was difficult to manage. I was seeing a lot of the questions that came into the clubhouse, and I was thinking the exact same things because I've never made the trade, and I made the trade on both the GMCR trade and the Facebook trade, and it was a unique experience, and something I'll definitely do next earnings season as well. But the first time you do something, guys, it's going to be a little difficult, and I'm just so happy to see people out there applying the things that Gino's putting out there in the scouting report. It's going to make you better and better and better, guys. Next earnings season, you're going to be even more prepared going into it.
And you know what? That's a great point, Matt. Also, I just want to make sure the most important thing is the management of this. If you look at the middle of that bird right there, that condor, you put your cursor, it'll show you your max loss on Thinkorswim right there.
Okay. So if you put that right in the middle of the condor right there.
Yeah, you see that flat red line?
Yep.
So 920. If you don't want to lose 920, you got to get out of that at your risk threshold.
So now you're talking about this number right here, where you can see that at expiration. And
so you see my risk threshold is like, let's say 300 a trade. I'll only buy $300 worth of these, and I could take it all the way to expiration and not worry.
Mm-hmm.
But if you're playing an event, and you got like this one 920 in there, and your pain threshold's 300, how do we figure out when to get out of this? Well, Noah will show you. You can move the date there.
Okay.
And you can see the time decay.
All right, so now as I march the time forward, and you look at where we're at today, if I were to march that forward, and these expire on the 14th, as we're getting close to expiration, you can see that theta starts to eat you alive.
Right.
So absolutely. So how many days would you be in the trade, and would you consider carrying those over the weekend risky?
I usually analyze it 5 days to a week later. So I always automatically set that for 5 days, because when I set these up, I test them to see if 2 ATRs, if it moves 2 ATRs, will I be profitable? And usually I want to double my money on a 2 ATR move. So we go 5 days out and I see what the time decay is. But remember, you're going to get a Vega crush if there's a ruse event. And volatility comes out of that, it can speed up that loss. So I don't go a lot of contracts on these.
So looking at this, Gino, when you mentioned that this is a gamma play, you've got the initial delta and the gamma, which accelerates. This is kind of describing the slope of that white line, right? So if
Exactly,
it's
the slope of the line
in my right
steeper.
direction, the gamma is adding to the delta, and so you're starting out with a relatively small delta, and it's going to be adding that amount for every dollar that it rises. And you could take that little price slice on there, and if you watch those numbers, you can actually see how the delta accelerates as the price moves in the right direction. If you were to get two ATRs, what would that put you at price-wise, do you know?
Let me see what Baidu, what's its ATR? Let me check it out.
If we were to look at Baidu,
I got 777, but the options are pricing in a 5.
Okay, so
So
776, 777. So if you were to pop
$15.
up, you would be up here towards 254 and change.
And you're in your spread.
Okay, so if you got two ATR move back to back on that, that'd put you up here. And if you look at that price slice, I kind of slide it up and just put it at 250. If you were to get a move up to 250 over the next 2 days, and I marched the calendar forward till Friday, you'd be running on a delta of 75. Your gamma's starting to drop because you're starting to hit that maximum acceleration point where you can see the slope start going from up. You'll see it start to plane out. You'll see your theta switch is getting smaller. Your theta is getting closer to 0, and as it gets past that theta switch point, it'll eventually turn positive if you're in the right part of the condor. And as you're moving, that volatility starts to the vega exposure gets a little bit smaller too. So if it's moving in the right direction, you're okay. But if it's staying at the same place, the trade's not working out for you, you're going to time stop out. Is that correct?
You got it. Time stop out, which means you got to keep your eye on it, or position size to where you can take it to expiration.
Okay.
Now when I'm screening for these, there's two candidates, two ways to look at it. Of course, they're expensive stocks that have big ATRs. You don't want to do this with stocks that have a 30-cent ATR. I'm looking at 2.5 ATR. Because you'll notice stocks that have ATRs of like 3, Baidu 7, they move sometimes $10 overnight. You're like, where'd that come from? From any little news. But you got earnings season here, a volatile market, not on the VIX, but on the market itself. And what I'm looking for, if they don't have news, is if their IV, the implied volatility on Baidu, for example, or one of these other candidates, is at the bottom third or actually bottom 20% of its range. I want cheap options. Because if you get a big move, volatility will spike and it'll help you.
Yeah, and I'm glad you said
You're
that
talking about, just to clarify that, Gino, as you're looking at this, you're talking about
there you go.
Volatility.
Look at the IV on that. Look at the IV down there.
Really low. And that's usually going to occur after earnings, correct?
Mm-hmm.
As you get that volatility crush at earnings, and so now they're cheap, and you're going to be able to get a lot of bang for your buck on those.
Okay, now,
Yeah, and Gino, real quick, glad you
let's
put.
wrap this conversation at some point quick.
Yeah,
Matt.
I'm bringing it up right now, T. A couple things real quick. Number one, great conversation on the Debit Condor. I think we've given people a lot of food for thought and things that they can start practicing out there. When Gino mentioned volatile market, I'm glad he mentioned that as the market, because the VIX isn't volatile right now, but the market is moving 1.5% a day. And I would consider that volatility, in terms of speed up or speed down. So absolutely fantastic discussion on the Debit Condor. Let's kind of move on to looking at this week in the market, guys. And I want to get everybody's take on this. Tim, I want to get your take first of all. First, when you're looking at the marketplace right now, the S&P 500 on the E-minis just on yesterday kind of broke out of an all-time high. It's slowing down a little bit. But what not outside of what drove the marketplace, but where do you see the marketplace kind of doing this week? Let's give some people some ammunition coming into the rest of this week, coming into Wednesday, Thursday, and Friday.
Sure. Let me kind of sum up my thoughts on it pretty quickly. This week is the most important week of the month for me. Mm-hmm. There are more companies that report earnings, and there is more economic data that is significant this week than all the other weeks in the month of November combined. Later in the month, retail sales and some of the retail companies will become part of the focus. And maybe the absence of news can create volatility too. I'm open-minded to that. But to me, this week is the big week in the market. Mm-hmm. I'll just call it like I see it. I think the most likely scenario is up. And that's because of the stable market conditions and the willingness from institutions to jump back in there with both hands and buy even into resistance yesterday and they're buying the lows and the dips here this morning. That being said, I'm very cautious with tomorrow's ADP report and in Friday's jobs report. You're going to get volatility. I think it's a great week for day trading, hedging, and planning, and getting ready for some of those triggers if they do happen. But like take a look at stocks like Apple Computer that broke out and ran. You know, there's something out there that you can get confident behind and buy if the market does strengthen. Today's market is one of those markets where I kind of back off a little bit, and I'm going to do more trading tomorrow, I'm sure, once we get a little bit more direction from it. But I think the most likely scenario is up through the week. Now, there may be some differing opinions on that from the team, and I would love to have that discussion, but I'm
that's
there.
perfectly fine. You know, looking at Tim talked about a lot of the economic reports out there this week. We had the manufacturing index, the ISM manufacturing index, come out yesterday. It was expected to come in at 56.5. It actually came in at 59. That's a bullish sentiment on the manufacturing index. Trade balance today. I'm a little worried about the trade balance. Came in at a negative 43 billion. It was expected at 40 billion negative. That's very concerning when we've had so much quantitative easing. When one of your reasons for QE was to start, you know, sending more goods out there. So that's a little concerning today. That was a negative. And you did see the market go down on the trade balance this morning as well. Tomorrow we have the ADP non-farm employment change in terms of starting with the ADP reports. You also have an ISM manufacturing index report tomorrow. Coming on Thursday, unemployment claims, which is a weekly report. And Friday, we have the big dog of them all, the unemployment rate coming in at 8:30 a.m. Eastern Standard Time. And you also have Janet Yellen giving a speech out there on Friday as well. Not to mention, we have the midterm elections today, ladies and gentlemen. Republicans, Democrats out there, support your candidates. I don't care who you support, guys. What I do care about is you vote. You go out there and you put forth your democratic responsibility to vote. And so I think that's going to have an impact to the market as well. You know what? I'm still not buying the market, guys, to be perfectly honest. I still see a rush to safety in with the upward movements. I see still healthcare staples and utilities and financials for the better sectors out there. I don't see a lot of aggressive companies doing aggressive things. I know the market's fading up, but to me, in my estimation, I'm going to be perfectly honest. If you're going to go long, you better be willing to hold through a retracement of at least 5%. That's my stance. If you're willing to hold through if you're willing to go long right now.
Well, I've been looking at this, Matt, and I've been trying to repeatedly take stabs at the bearish side, and not a lot of the trades have been getting filled because I haven't gotten confirmation. But as I've been looking at the markets, and I've been looking at how I see it, I perceive it as a little bit overextended. So as I look at this, let me see if I can pop that open. You look at the last couple of years, and you find me where the market has run more than it has in the last 2 weeks.
It hasn't.
Without a correction, it hasn't. And so that puts me into this situation where I think we're range up. And if we do get a breakout, kind of the way I'm looking at this is if we do get one, I would probably expect that it turns into a cup and handle. And so it's going to retrace back down. So Matt says 5% retracement. I'm with that. I still have been looking for bearish retracement, stuff that has been up.
Pull up a couple stocks. I made a couple trades last night. They're still good. OKE is the first one. Okay, they'll bear retrace, continue going down. I got triggered into OKE yesterday on the movement. So I've had a really good movement on the way down. I fully expect OKE to come in, test 52.5 again. That's still $4 down on a $55 stock. That's an 8% movement on the options. That's a 60 to 80% movement on the option. And then another one is TripAdvisor, TRIP. Those are two of the better bearish retracements I found. And I had the gap down here today, and it hasn't continued. But both of those two I entered into yesterday into 2 trades there. So, you know, I think bearish retracements are really good right now. You know, obviously already in downtrends. And it's not that I disagree with Tim. I mean, nothing would shock me in the market, guys. Not right now. I mean, I was not expecting the market to do what it has done in the last 3-4 weeks. But quite frankly, guys, I don't think anybody in the market was expecting that. I really don't. I think there's a lot of manipulation going on in the market right now. It doesn't shock me that the U.S. comes out of quantitative easing just to see the Japanese and the Europeans get into it. So, you know, I think there's a lot of manipulation going into the market right now. I think short-term trades of both, and this was a question coming into on the clubhouse to both Gino and all the coaches, was a lot of the targets on bullish trades have very short targets. And I think one of the reasons for that is we don't trust the upward movements. And so when we do get those upward movements, whether it's 1, 2, 3 days in the trade, we're willing to lock in profit on those because we're fully expecting that retracement soon enough.
Yeah, and also, by the way, Matt, the reason we have a short-term target is that's the nearest resistance. You got to take something off. You got to take something off when you hit a near-term resistance.
Exactly.
I'm always taking profit right away just to get my position size smaller and to ring the cash register. Like right now, Oxy, if you pull up our chart on Oxy, that's on our scouting report. We had a nice gap down. It was our bear pick today, or actually from Sunday. We got triggered yesterday at 87.11. That was my trigger point.
Yeah.
So we got in at the end of yesterday, and look where it is today. A lot of people say, okay, this thing's going down like a lead balloon or something, you know. But you see that candle? It wouldn't surprise me if it fills the gap tomorrow.
No,
now, it hasn't hit my target.
You know,
it hasn't hit my target, but I'm looking at $900-something profit right now. I'm going to close. I got 6 more contracts, 7. I'm going to close about 2/3 of the contracts. I'm going to post it on the chat room too.
Well, on OKE, I'm taking profit today. I literally made the trade yesterday. I'm taking in profit today because it reports earnings tonight, and it was the best retracement I could find, so I might as well do it. You know, so it's right now short-term trades are dominating. I do want to get Gino and Noah's take on where they see the market going. I think Noah's, from what he kind of gathered out there, was very similar to me. He kind of sees a little an expected retracement, maybe not initially, just right now, but soon enough. Gino, where do you see the market going in the very short term, 1 to 2 weeks?
Well, here, the way I'm looking at it is there's a lot of bad economic things out there globally. I'm looking at the EEM, which I was talking about last week, which is the reason the market tanked in the first place, that big pullback we had, is a lot of European concerns, the dollar concerns, and all that stuff, quantitative easing, Europe. So I'm looking at those emerging market countries, EEM's the ETF for that, and VEU. If you look today, we just got a swing high, and it's a lower high. So if we're going to pull back, this is probably our first indicator. So I wouldn't be surprised if the market's down tomorrow. There goes my Oxy. I just closed 2/3 of the position. So there's EEM, emerging markets. We triggered a swing high a couple days ago. See that? Well, actually triggered yesterday. So we had a doji. Now, I'm going to watch that to see if that goes up or down. But now if you put that together with VEU, that's the entire world. Biggest companies in the world that are not American.
Look at that.
So if this one holds and does a swing low, so right now we're on point of demarcation right here. If this breaks down, we're going to follow. If this does a swing low, we're back off to the races. Because honestly, our earnings, 75% of the companies beat. It's the best earnings season we've had in years. I think it goes back like 10 years.
Yeah, it's usually between like 68 and 72 is the percent that we had a fantastic. And you know,
and also, how about this? Oil prices, new low again today. Now, that's good and bad. That hurts the energy sector, which is part of the S&P and the Dow.
Gives consumers a little breath of inflation life, though. You know, gives them a little bit more spending power out there, and that's something we need.
And what's amazing about that is the dollar is actually down today, and oil's down big.
We'll talk about the dollar, guys. We'll talk about the dollar in here in a second when we do.
But here's my theory, Matt.
Go ahead.
Oil is really cheap. I just noticed that I'm paying less than $3 a gallon.
It's national average is less than
natural stimulus to my paycheck, or most people's paychecks, whatever you want to call it, your income. Because I was used to paying $4.50, and that's extra money for Christmas spending, which is going to fuel the Santa Claus rally because now I'm going to spend more in the stores. It's freeing up cash.
Well, that's because consumers don't know how to save
or
invest. They just know how to spend. But I do want to talk about that real quick. First of all, the national average is under $3 for the first time in 3 years. I see oil, and interesting enough, the Saudis came out yesterday and announced that they were going to sell oil to the U.S. for a cheaper price than they'll sell to anybody else. they're not going to take away supply of oil. They're going to continue to drill for more and more oil, which means they're not going to prop up the price. I see oil being in this range between 75, 85, in that range for a while now, guys. And the Saudis kind of confirmed that yesterday. And it is putting a little pressure on the market. It is good for consumers out there to give them a little much needed breath of relief out there. Real quick, you talked about the emerging markets out there and all the economic problems in the world. Interesting. The Japanese market went into an official recession today. Their GDP was negative 2 times over. They're in recessionary territory based on their slowing economy, and the Japanese market is literally up. You know what? It's down today, but it's up over the course of the last week and a half. It's up about 15% over the last week and a half. I mean, just a ridiculous moment. But I think that market and the Japanese market is going to put a huge pressure on the world market. I really do.
I agree. You know, a way to trade that is the EWJ.
Pull up EWJ. No,
That's an ETF, cheap ETF. Nice little covered call ETF, actually. It's $11, $12, and you know you can sell the 12.
A bit of a gapping personality disorder. That's a little schizophrenic on the chart there. It moves a lot.
Yeah, but you notice it's been between 11 and 12 for the last 2 years.
Economics.
So if you squeeze it down, it's really sideways.
Yeah.
But God, their dollar against ours is so volatile.
Let's take a look at that.
EWJ, right? EWJ.
Yeah, EWJ is Japan.
I like that one. That would be a very aggressive short position. The Japanese market is exploding because, interesting enough, guys, did you know that the Japanese government is actually purchasing share prices of their market? They're printing money to buy bonds, they're printing money to stimulate the market, and they're printing money to actually place in the markets themselves.
Wow.
Yeah, that's Abenomics. No wonder they're in 3 decades of stagnation.
Gold is also looking like it.
Let's pull up gold there.
Okay, spot price GLD, YG. Gold is down, down, down.
You know, whether you agree with it or not, guys, gold's bearish, and it will be bearish. I've said for 2.5 years, guys, that gold's going to 1,000 an ounce. That's where I see it. I think there's nothing that's changing my opinion on that.
Yeah, silver's down big too, but I'll tell you, it's almost a reverse chart of the dollar. If you put the dollar or the UUP in there, you'll see.
Yeah.
It doesn't stop me from buying silver coins whenever I pass one of my coin shops, though.
No, and no, I mean, buy a put option on SLV and go take the proceeds and buy all the silver coins you want.
Mm-hmm.
Now, Matt, speaking of the dollar, you've got the dollar chart up there. Look how strong the dollar's risen against, like, the euro, for example.
A couple things on the dollar. Every week, I did miss one last week. I was traveling, but for the last 3 out of the last 4 weeks, I do the Forex report. Every Monday, I do a video. It lasts about 7, 8, 9, 10 minutes on it. And from about 3 weeks ago on, 4 weeks ago on, we've been, and if you'll go to Tackle Trading and show them where that video is, Noah, so everybody can kind of watch it. I've been strong dollar. You know, I was looking at the Forex reports over the last few times. Every one of them are strong dollar, strong dollar, strong dollar. Right now, in terms of the Forex report, a couple of things. I did go neutral on the British pound, U.S. dollar. So I see a little bit of slowing momentum in the pound dollar. And that's in the video blog section, guys. Go out and check that out. So I took off a little bit of pressure on the pound. I am neutral now on the pound dollar, but I am very bullish on the U.S. dollar, Japanese yen. I think that is just an absolutely that's a runaway train right now. And honestly, guys, this is my opinion only. I truly do believe the Japanese are trying to kill their currency. I think they're trying to kill their currency to inflate it away because their debt-to-income ratio in that country is twice as bad as ours. That's like us being $36 trillion in debt, and the Japanese aren't a reserve currency. So I see what the Japanese are doing. Going to put a lot of pressure on the yen, not only right now, but into the future as well. So I think a U.S. dollar yen, I'm very bullish on that one. When the franc and the euro break down and up respectively, I'm bullish on the dollar against the franc and the euro as well, and the same thing with the Australian dollar. So what I'm trying to do right now, because obviously in the markets they're a little skittish, the forex market has actually been very straightforward lately. It's been technically sound lately. It hasn't had the craziness lately, and it's been very, very, it's been a true market. And so for those of you who are being a little confused in terms of what the stock market is doing and all these complicated trades like debit condors or demicons, like Tim says, go make it simple, guys. It's all technical over there. The U.S. dollar is strong. Go start leveraging your currencies to make more of it.
Yeah, I love that Forex report, Matt. Thank you for putting that out every Monday. I really, really enjoy that. I think the currency markets, whether you trade them or scalp them or if you use automated systems, that's all a different animal. But at the very minimum, you have to keep an eye on currency valuations, even for your own analysis on the stock market, the options market, direction. So, yeah, if you guys have not checked out the video on the currency report, please go and watch that and comment in the clubhouse if you have questions. I did have one. I saw two questions come in that I want to make sure we get to because they came in early. We put out the offer for questions, and one was from Melanie, who I believe is here today. Melanie, and look here. Gino, it was in the clubhouse. And Melanie asked you how often, and we can throw this out there to the whole group, how often do you move your orders around if you don't initially get filled?
That's a great question. You got to, like on these spreads, when it's a debit spread, anytime it's a debit, you have to limit how much you're paying. Because on a spread, you're limited to how much you can make. The more you make, the more you pay, the less you make. And we have a reason why we go for those prices. So on spreads in general, we don't like to pay more than 40% of the spread. So if it's a 5-point spread, $2. 10-point spread, $4. 40-point spread, $10. 1-point spread, 40 cents. So you'll notice that 2.5-point spread on the Debit Con, the total thing is $1 on a 2.5-point spread.
That's also true, like on vertical spreads too, like the
any debit
spread, the bear put spread. When you're just doing that buying the at the money, selling out the money with 25 delta, we're looking at paying 40% of the spread there either. So
or less.
Yeah, or less. Hopefully that answers Melanie's question.
On a credit, though, now here's the funny thing, Matt. On a credit, the reason I got the nickname Theta Maker is because I do so many of those trades and my batting average is huge. Is because I'm happy with 1% return a week. Some people won't do a credit spread unless it's like 20% or 15% in a month, And classes out there, they even teach, oh, you want a 10% return on a credit spread. Do you?
No.
I'm happy with 2%.
Well, it depends. See, I get real frustrated with all those people out there. I think it's actually really lazy when they teach credit spreads and say, okay, you want 10% of the spread, you want 10% of the spreads. Well, that's awesome, guys. You're lazy as hell too. If you're selling a 20 delta, 10% of the spread isn't very good. If you're selling a 30 delta, 10% of the spread isn't very good. If you're selling a 17 delta, 10% of the spread isn't very good. And that's one of these times in the Culture Show, we really need to go over the concept of Royd, where we really start, which is absolutely proprietary to what we do at Tackle Trading. Nobody else out there has it. Royd is simply your comparison of ROI divided by your delta. To understand how good a credit is, it takes into account the probability of success on the trade, which is based on delta. So if I sell a 10%, if I sell a 10 delta, I want somewhere between an 8 and a 10% ROI. If I sell a 20 delta, I want somewhere between a 16 and a 20% ROI. And so you really got to take the concept, and like Noah's putting up there, reward versus risk. It's not just your percentage of the spread. It's the delta. It's on the credit. It's not so much on the debit. On the debit, you're fine with the 40% or less of the spread. But on the credit, you got to take into account that delta you're selling. You got to take into account the reward to risk ratio. And so what we do is we take the ROI, we divide it by the delta, and if that's 80 to 100% of the ROI on the delta we sell, that's a fantastic credit. Fantastic credit.
That's a great lesson right there.
I made that one up about 2.5 years ago, by the way, and it took me about a year before I was confident enough just to talk to you guys about it.
Isn't that the case though? When you have those, when you've been trading long enough and you understand things well enough, you do come up with ideas. You realize things that you can then express. And I've been like in the process of teaching and said something that I didn't realize made so much sense, something like that.
Yeah.
I explained it in a new way, and I'm like, well, yeah, that makes perfect sense. And then you have to ask yourself, did I just come up with that? Did I just literally pull that out of a hat? And you do, and that'll happen to you, the team members, as you trade more and you trade more. You'll start to recognize and realize and know what it is that you can do. You'll recognize that, oh, I can do a different style adjustment. I can add this contract or that contract. You become confident in what you're doing.
Well, and maybe next coach's show we'll pull up that spread calculator on the credits. We'll fill out a couple of them to show people actually how to do this in terms of using that spreadsheet. We'll give it to our pro members out there as well. It's a spreadsheet we use to assess whether this credit is a good credit versus that one, and it has the ROID actually built into the credit sheet, so it automatically calculates it as you fill out the stuff you need. We got another question out there from Thomas. Thomas says, Matt, what are the Forex market hours? Forex market hours are as follows, 24 hours a day. From the time the Australian markets open up, and really kind of the Japanese markets, the Asian markets open up on Sunday night at about 6 to 7 Eastern Standard Time. They are open until Friday night at 5 p.m. Eastern Standard Time. Those are your standard Forex market hours. And because there's a bank open up at all times during the day, you have the markets that are constantly open. If you're going to trade currencies, you need to understand the banking hour system. Currencies will trade when a bank is open very, very aggressively versus when a bank is closed, due to the fact that you got a lot of news coming out, you got economic reports coming out. The high-frequency traders are out there and about, and they love the currency market lately, guys, especially the dollar yen, So it's a true 24-hour marketplace. Maybe one of these coaches shows will do a little Forex 30-minute Forex discussion on the actual market hours and how we trade it. Good question.
By the way, speaking of Forex, Matt,
yeah.
Can you hear me? I just want to throw a quick note on the dollar. Just you guys have a little look forward of what happens, because I've been in these cycles for almost 16 years now. When you get a spike on the dollar like this, especially against the euro, especially against the major 8 countries, the pigs, the BRICS, all that, what happens is the market looks good right now. The energy sector doesn't, because it's going to hit ExxonMobil and Chevron, and I think we have another wave down in the energy markets. But what happens is, on an economic view, if you haven't had economics in college or something, is the rest of the world has to buy our dollar if they want to buy our products. Mm-hmm. So they have to buy our dollar, which is inflated right now, to buy our products. So gold might be cheap here, but that's if we buy it with US dollars. If we're buying it with euro or something else, it's not the same price. So what happens in the long run, we're talking like 6 months from now, is you're going to see our GDP drop. And you're going, wait a minute, the market's good, the economy's great. Well, it's because the stuff we're selling to other countries just got expensive to them.
Well, think about it, Gino. When you look at the macro cycle, and I can kind of see this playing out over the next year, when you see the macro cycle right now, GDP is going up right now, even though we just had a revision to third quarter GDP downward. Almost everybody revised it downward. GDP is going up, the economy is going up, and everybody's like, oh my goodness, this is really, really good. Well, guys, you got to realize the economy lags the marketplaces.
That's
and
right,
you're talking about a 6 to 9 month lagging period. And so the market will start to top out before the economy starts to top out. And that's just kind of the market cycle. And so, Gino, that is an absolutely fantastic point, that when you see this strong dollar, you might think it's really, really good for you right now, and it kind of is, you know, in a certain aspect, but it's going to make our goods more expensive to the Eurozone. It's going to make our goods more expensive to Japan, and both of those two markets are going into a recession. And so when you're looking at that, they're not going to be buying our goods, which means the GDP is going to come down. And a contracting GDP, guys, that's called a recession, and it fits right within a 5, 6 year, 2 year bull bear market cycle. And so, you look at this, and it's more evidence, Gino, to me that 2015, especially the latter half of 2015, I think it's going to be a tough latter half of 2015.
Yeah, so I see a tug of war there, but them raising rates next year and the GDP if it drops. But I do see a rally into Christmas. Oh, by the way, guys, my favorite time of year, Thanksgiving. You get pretty much 4 days off. The market's open on Black Friday, but it's retail traders only because there's no institutions going to work for that 1.5 a day. The volume's going to be light. So you sell your credit spreads Wednesday morning or even Tuesday afternoon. You got a lot of time to clean there. That's theta giving, we call it, not Thanksgiving.
Theta giving. We will definitely have a coach's show on theta giving. I'll tell you that right now. Theta giving is the best holiday of the entire world. We not only get to make money while we sleep, we get to make money while we just eat and watch football, and it's just going to be an absolutely amazing weekend, 4-day weekend. So I think I got the coaches shows planned out. The next three of them, guys. We got the what was next week? We're going to do a forex report next week, kind of what the kind of the whole market cycle, how all of us approach trading currencies, because we all do. Then we're going to do a credit trade coaches show in terms of Royd and identifying good credits, vertical credits, condors. And then we're going to do the theta giving coaches show coming in 3 from there. I think that's a fantastic schedule.
You guys, I'll be out of town.
Oh yeah, you're not here. Yeah, where are you going to be?
I'm going to be in Maui. There's a 70-year swell coming, my friend.
You're going to be on the way?
That 70-year swell. So if I don't come back a week after that, you can pick me out of the coral.
I'm going to tell you right now, Gino. Okay, what day are you going to be there?
I will be there Saturday to Sunday.
I am going to watch Point Break Saturday night on the plane home. Watch Point Break, and I'm going to think about you. And you're not Johnny Football in Point Break, Gino. You are Patrick Swayze. You're Patrick Swayze.
I'm not going to paddle to New Zealand, man.
Listen, maybe you will, maybe you won't. You don't know. You got to go where the waves go, man. Come on, bro. Let's do this.
Real quick, Cal had a request for Gino. Let's make sure we hit that one question. I think that's the last one in the chat we didn't get to. Some of the other ones we'll have to dive in further. Gino, Cal asked you, can you please let us know how you're going to manage the Tesla butterfly before earnings or after, and which legs?
Okay, the Tesla butterfly, that is a very cheap way to trade. That's an advanced, I call that my butterfly garden. That's where I plant a whole bunch of butterflies out of the money, at least 2 to 3 ATRs, small deltas. You're hoping it gaps. It's, you try to get into those things dirt cheap. What did I pay for those? 20 cents? Yeah, I paid 20 cents.
Yeah, earnings tomorrow on Tesla as well. You can place this trade tomorrow, guys.
And I only did like $200 worth, which is 10 contracts. Let me see what I got here. Where's my Tesla? Oh, actually, I only have 4x4. I have a 4x4. I might even add that to today. So I'm hoping to gap anywhere near. You get 2 to 3 ATRs in either direction, you're profitable. So take it all off. And by the way, you take off the one that's profitable. Only sell the other one if it's got something to sell. If it's in the money, you got to close it. You got to close it. Even if it goes all the way through the butterfly, completely blows through it, and you're showing a loss, you want to close it because you don't want to take assignment on that. The butterflies are a real pain.
What month are you doing that one in, Gino?
I am 3 days out. I'm doing 3 days out. The November's that expires.
Oh, you're doing the weekly?
Yeah. It's the cheapest way to trade out of the money butterflies. I like those much better than strangles because your risk is limited. But the upside on this, let me just show you my upside. Let me just get my analyze here.
Wrong.
I have literally $80 risk. Let me see.
Awesome.
And I just did it because Tesla's very popular, but it's an advanced strategy. I got $136 risk. The max I can make is $650.
I think it's going to do. I think it's expected to gap 18. I expect it to gap more than 18 on its earnings tomorrow night. It's a very popular stock for people to trade, and it's had a little struggles recently. So I do anticipate a little bit more than 18. The inverted butterfly would be a great trade. on the Tesla trade. Guys, we're at that we're at the ding ding time. Parting thoughts very quickly. Everybody's got 5 seconds. Parting thoughts. Go ahead, Gino.
Play it safe. Don't do big positions right now. And I expect to pull back, but I am buying on dips. Watch the dollar. Just came inside the Bollinger Band today. Other than that, you guys wish me luck. I'm out in the water.
Hey, have a great ding ding, ladies and gentlemen. That's for us at Tackle Trading. We like to keep a good, tight schedule here at during the Coaches Show. Next week, we're going to have a fantastic Coaches Show on quite a few things. Obviously, we're going to cover the scouting report, but we're going to get into a little bit more of the Forex market cycle. Gino will not be with us. Tim, Noah, and myself will hold down the fort. Check out the Trading Justice podcast on iTunes. Guys, if you like the podcast, do us a favor. Go out there and write us a rave review on that podcast. We love putting it out there. And if you like it, get out there. And check us out on Twitter. I'm at MattJustice13, Tim Justice Utah, Coach Noah Davidson. Noah, you're at
Remy. Let's see, REMD. Remd. No, Noah Rem. It's Noah Rem. NOAHREM.
Gotcha, Noah Rem. And then Gino, what are your tackle?
I'm at Gino 4. But you know what? I do most of my tweets with my positions on Tackle Trading.
He does. Gino manages the Tackle Trading one a lot, guys. But definitely go fill out a nice little review on iTunes for the podcast. Check us out, all the stuff we put out there on the website. Look forward to the latest newsletter. I believe it's my turn up, right, on the newsletter?
Yeah.
Mm-hmm.
Yeah, I believe I'm up on the newsletter this week, and so I'm sure I'll have something to say about Abenomics and the Japanese. I guarantee that's because that's on my mind lately. So check that out, and we'll see.
Isn't it time you got off the sidelines and tackled trading? Join our online community of active traders where we make it happen every day. Stocks, options, futures, and Forex at www.tackletrading.com. Get in the game.